Welcome to episode 93 of Live with a Maverick. My name is Dominic Lee, founder of Maverick Actuary. We are a content community. Our mission is to maximize the impact and value of quant professionals on a global scale. The goal of this series is to educate our community on the most relevant themes in actuarial science, risk management, and analytics. The theme of today's discussion is digital transformation. And we are very excited to have with us our guest for today's episode, 𝗟𝗔𝗃. Annie is a senior advisor at Meanwhile, the first and only life insurance company denominated in Bitcoin. So welcome, Annie.
Hey, thanks very much, Dom. How are you doing?
I'm doing great. As always, big time differences here. So it's the afternoon for you. I'm still very squarely in the morning for me, but I'm doing well. Good start to the
Well,
day. So
fantastic. Thanks for inviting me to be part of your Maverick group. It's been first and fantastic. I mean, it's always been my aspiration. So thank you.
great. I saw your LinkedIn post and I was like, yeah, this is gonna be good.
Alrighty.
Yeah.
Okay. Well, how do you want to play this?
Yeah. So let's love to give you an opportunity to introduce yourself.
Well, I'm your standard actuary. I traditionally trained myself as from the Actuarial Science School in Australia, with Macquarie University, where a lot of very good actuaries come from. I don't know whether it still does, but it's where a lot of actuaries my generation in Australia comes out of. Primarily specialized in economics and finance, and I've been traveling around the world. I mean, my first job, 3 weeks into the job, I was sent to Indonesia to do an embedded value. So that's like my first foray into the international side of things from Australia. And when I qualified, I decided to backpack, and a gentleman called Mark Turner, also happened to be an actuary who's a consultant for Tillinghast at the time, said, why don't you just go to the UK, get paid and do some good work and get trained? So I went to Tillinghast, UK, straight off my qualification, and never went back, really. I've been traveling around as an actuary globally, working in lots of global institutions for the last 20 odd years, primarily in the mergers and acquisition side, doing restructuring and, building values and, doing stuff. And it's been fun. This career, this profession has been amazing for me.
That's awesome. So I never asked you before, are you from Australia?
So I was born, and my birthplace is Borneo, which is a pretty large island, not as big as Greenland, but it's a mixture between Malaysia, Indonesia, and Brunei. So my forefathers are from the jungles of Borneo.
Okay, interesting. Okay, interesting.
You're from Jamaica, so
Yeah,
you can understand the island mentality.
oh yeah. I'm from an island, probably so.
Same here, same here.
Yeah, so you prefaced it by saying you talked about the travel. You've obviously worked in different places. You're working on mergers and acquisitions across several territories. And something interesting I found about your background, or observed about your background, is that the breadth of experience in your previous roles. You've had such a rich group of experiences. And if we were to talk about them, I think we'd be here all day. So there's just two in particular I actually want to ask about, and that stood out to me. There are your roles at MetLife and AM Best. Those two I thought were interesting. So how do you come across those roles, and what experiences did you gain from each of those roles?
Well, those are some of the best places. All these roles are really global roles and touches upon a lot of jurisdictions and cross-border jurisdictions. So firstly, how do I get into these roles? With MetLife, I was part of RGA. But let's start with AM Best, because AM Best was before MetLife. And AM Best came about because when I was in Tillinghast, I did a lot of mergers and acquisition on market valuation exits. So a lot of realistic balance sheet, because when you buy a company, you have to have that value now. You don't use these book value and the lock-in values that traditionally at the time was Solvency One. But I think in the US and Japan, it's still quite book value basis. But I had to do the market valuation. I did a lot of realistic balance sheet as part of it, part of my work. And it was a very easy transition when AM Best wanted to open up the credit space for the rating. And I naturally fit in because I knew the kind of like projections on realistic balance sheets, and that was credit rating, understanding the cash flows and understanding the real-time value or the realistic value rather than the book value, which is, you know, what happened 30 years ago when you first wrote a policy. So that was a natural turn because they needed someone and I was a natural fit. And it just literally opened up the whole life credit for AM Best around the world, except US. But I spent a lot of time in a place called Oldwick, where the HQ of AM Best is working with the guys in AM Best on the 𝗘𝗏𝗃, which is their capital adequacy model for the life insurance sector. They had a PNC very well done. You know, they dominate that market, but it was the life that they wanted, and it was good fit. Then I mean, obviously with AM Best, I went into a reinsurance called RGA through a friend. And it was an inspirational CEO called 𝗘𝗽𝗃𝗪 who took me under his wings. Literally over the last 20 years, my career was literally helped by him. And he put me in RGA. He looked at me and just go, "You need to go to Korea." Korea at the time for RGA was one of the bigger entity, much bigger than the UK. And there was a bit of a problem there with critical illness protection business. So then he sent me to Korea, thinking I look Asian, so go there. And from Korea, MetLife spun off the Asia Pac, wanted to set up a base there, and MetLife owned RGA at the time. And that was the transition into the MetLife Group, MetLife International. And again, that's just a crazy career. First, the whole of Asia Pac. Then during the financial crisis with the Alico event or the AIG event, you know, we had to buy Alico, which is the AIG life insurance section of the business, 50 odd countries, and amazing, you know, from Lebanon to Yemen to Pakistan to the Western European and all this. So yeah, it was fun.
Yeah, you talked. One of the things I saw that with MetLife, you talked about manufacturing and reviewing products. So what products kind of were those?
So as an actuary there, it was regional approval process for all the products as an actuary. So you have to, you know, approve all the products, make sure they're profitable, make sure it falls under the kind of like risk parameter of MetLife's appetite. So it's all the products from traditional protection to whole of life to traditional. So I would say almost over 1,000 products had to come through us. I myself personally had to deal with Korea, which turns out products like no tomorrow, like a sausage machine, and they had to review it every year. China and Japan and all the variable annuities and all this, working with some very strong experts who I rate very highly in the industry. So yeah, I mean, it's all the life products that's within the region, and following that, as I headed up the protection business for MetLife International, it was all the protection business and critical illness, PA, stuff like that. So again, you know, this product side is actually very interesting because not only do you look at it from a technical perspective, making sure they don't lose money or they make money, but also linking up with the distribution guys, you know, going skiing with them, partying with the Citibank guys, and explaining how mortality experience works when they're selling products. You know, they would like to know what's the basis of all that. That was a great fun. I mean, even till today, I still keep in touch with these guys.
That sounds like a great experience. Now you didn't mention, yeah.
Party hard.
Yeah, I approve. So you know, you didn't mention that one of your areas of expertise is exits and mergers and acquisition, M&A transactions. So fundamentally, when you think of M&As, at least from my perspective, not really being deep in that area, you think it's either one company is being absorbed by another or two entities are merging. But the core thing there is that there's a strategic restructuring that happens. So before we get into the details of some of the work you did around the exits and the M&A transactions, like from your experience, what are the primary motivations or drivers for any strategic restructuring?
I'm going to be a little bit controversial here. I'm not going to use the textbook version because my experience has not shown that it is a textbook version of the textbook version here. What I meant is, you have a playbook, a list of potential companies. You look at the annual reports and you look at this, you look at that, and you say, this is a good fit because this is the same product, or we can merge this product and stuff like that. My big M&As generally never happen like this. M&A to me is like a relationship, how a relationship happens. When you decide to marry someone, how do you decide? Is it an arranged marriage? Arranged marriage will be similar to in an M&A scenario, will be during the financial crisis. AIG came down. MetLife was asked to buy them up. Silicon Valley Bank in the UK, when it went down, HSBC would say, get your citizenship ready. That's your job. Pick it up, and that's coming from the government or the regulator. Do your kind of like corporate citizen responsibility. So that's kind of like one way of looking at potentially how M&A works. Another way is when you're sick and tired of a partner and you just want a divorce. It's what in the M&A world we call it as a non-core strategic asset. So again, divestment, this is how divestment works. A lot of them is often non-core, often it strains, it hurts, it needs more capital. You just can't support it anymore and you just have to go and someone buys it off you. The other way is potentially a natural love, over a dinner, two CEOs had dinner and said, hey, wouldn't it be a great idea if we join up, we'll get bigger, or we can get into this. And that's how another M&A would work. So that's naturally a lot of relationship building behind the scenes. And that's my experience of it.
That's a really effective way. It's always good to use an analogy that's relatable, at least to most people.
Hopefully.
That was very good. That was very good. So now you've obviously been involved in these M&A transactions. So how would you describe the pathway? Of course, when you have a strategic restructuring, it starts with, evaluation is obviously a really integral part of that. So, but I imagine that there's evaluation, the restructuring, and then there's a number of things in between. So how would you describe the pathway to an M&A transaction from valuation to strategic restructuring?
I think the strategic restructuring is the overarching. If the story does not align, if the strategy doesn't align, no matter what valuation looks like, it will not happen. So as actuaries, we have to be realistic and be humble enough to know that our calculation does matter because it's about the money, it's about the finance. But at the end of the day, the soft matter will make that happen. I think this is how I think at a high level this happens. So don't expect the calculation to be the be all and end all. Not at all. The price is the base, then you negotiate. I like you, yeah, I'll do a bit of a cut here. I don't like you, I'm going to make it hard for you to get in, right? But the strategic fit and the strategic mindset has to happen between the two parties for a marriage to happen or a divorce to happen.
Yeah. So, so just thinking of it in terms of what you're doing, like your level of involvement as an actuary, I imagine that you're involved with the valuation. So is that essentially like just looking at reserves, like just quantifying liabilities, like what goes into that?
No. This is a stigma. Actuaries don't just do liabilities. Actuaries just don't just do pricing. Actuaries don't just do do data cleansing. This is very, very specific to our job. This is part of our core skill set. There are some actuaries who would revamp as investments, who create investments. My role has always been at a management and strategic role. So, making the whole thing work, it has to have the right price. It has to have the right governance and structure. It has to fit into the right company and the right kind of spot. It has to create value. So my side of it is more looking at the whole thing, but my core skill is finance and valuation. I know how money makes money and I know where the value is, but it doesn't mean just that. The products have to fit. The distribution channel has to buy in. If the agents hated it and they're going to run off, the valuation suddenly drops. So yeah, I mean, actuaries cover all spectrum of it if we really want to. We stick to our core skills and we actually extend beyond that. And that's what actuaries are, not just liabilities. Liabilities can be done by AI and computers these days.
Yeah. So like like if you were to give me, I know you talked about it being much broader than valuation. Like if you were to give me a specific, just trying to get a sense of, what role you played as an actuary in these types of projects. So like if I imagine that there are several different, like you said, several different tasks and things around the strategic nature of that. Like what's an example of something that you'd be asked to do specific to one of these transactions?
Mm. So one of the things was MetLife Japan. That was my kind of like lead to bring it in as part of MetLife Alico acquisition. It was making sure the valuation makes sense, so that at the press level you can convince the analysts that in a very convincing way, and we actually know the kind of under the bonnet to make the story credible. So it's actually helping the kind of equity analysts and the press to actually understand why we're buying those entities. Other than that, also looking at the slew of products that AIG has or Alico has, and how does that work with MetLife's products going forward. So we had a products team in terms of distribution, all sorts of distribution channels all around the world. I mean, Bangladesh had the largest agency force, right? And how do you bring this together, and how do you work with all the distribution channels across all these jurisdictions and making it fit into the MetLife channel? These are all our skill sets. And I mean, I spoke about my first role in MetLife was in product approval and distribution channel. So I draw on this to then go into the mergers and acquisition and understand the different channels and understand the dynamics, understand the products and the dynamics. And it's not one person alone. There's the world of consultants were involved. The whole of MetLife and Alico guys were all involved. It's definitely teamwork. It's not possible for one person. But I was the coordinator of all that, the facilitator of all that.
Mm-hmm.
And the reason why an actuary makes sense is because we understand these dynamics. We can connect the dots.
Well, one thing I have to ask, because you mentioned with this acquisition, you said it was a 56 jurisdictions within this acquisition. So you must have learned some interesting things. Is there anything interesting you learned, like from a geographic about, one jurisdiction versus the next? Anything interesting you're willing to share?
55 to 56, depending on definition. I think cultures are different, but what really impressed me was when I dealt with the Lebanon Alico team. I had this impression that, typically women are generally quieter and all this, and all of a sudden, boom, the Lebanese lead was this female actuary who just literally just go, what about this? What about that? Where is this? What a delight, someone who actually knows what she's talking about and actually engages and understand the bits and pieces to actually work, as opposed to sitting quietly, nodding, not knowing what's going on kind of thing. So that really was a surprise. I didn't expect Lebanon women to be so amazing, especially in the financial services sector. Also, I mean, different cultures like Bangladesh. I mean, I never been there, and I suddenly realized how kind of like diverse it is and how big it is. The Middle East, what a gem, and it is so underrated at the time. It's like, who are they? And then suddenly, whoa, you've got number 1, number 2 market shares there. So yeah, lots to learn. And then compared to Greece, compared to Ireland, which I'm used to in terms of the markets, it was so much more colorful.
Yeah, and I'm actually looking forward. We're having an episode on the Middle East later on in the season, so I'm looking forward to that. So, thanks
Very
for
progressive. Like
yeah.
they have the ability to drive a Rolls Royce at any time they want. We're still on a Toyota or Honda or they just go for the best of the best at all times.
Yeah, well, interesting. So, yeah, so the theme of today's discussion is digital transformation, and you've made a kind of you've had a bit of an inflection point in your career, and you've had a career transition into quantitative risk management, and that coincides with digital transformation. So when I was thinking of the theme for this episode, I thought that made sense because we've talked about some of your broad experiences as an actuary, not just limited to the course sets, but probably more close to that world. And then in today's world, of course, working in a company that's doing something really innovative with Bitcoin. So I thought that digital transformation was like a really central point to that, or a central theme. But before we get into that, I mentioned that you had a career transition in the past decade or so into quantitative risk management. So how do you describe quantitative risk management?
Well, what actuaries do, we quantify risk, right? We calculate the price of the risk by the auto insurance premium, the life insurance premium. So it's a very natural move. And the trigger to that move is really because of Solvency II. When the regulation changed and it had to have someone to actually do the risk management side of it, both on the qualitative and quantitative side, it was a very natural selection to go into that space if you're kind of like in a situation where you can. Now, in the risk management space, I don't think it's just quantitative help because this is our edge, but we also have to understand the qualitative and the enterprise risk management framework across the insurance, pension, asset management sectors of finance, insurance, operational, strategic, and and reputational risks and so on. Those pillars, it takes a lot of experience to bring that all together. And if we were to be able to quantify that into one single number, which is solvency in the life space, that's what we do as a living. And it was a very natural progression, but also it's also plays to our core strength.
Mm-hmm. So yeah, natural. You mentioned, I figured as much. Very natural transition. I've always said that actuaries are in some ways risk managers. Of course, some of that qualitative stuff, things like purchasing insurance, it may not be the core skill set, but of course, actuaries have to wear a risk management hat many times, especially in certain roles. But in terms of the space that you're in now, what inspired that transition from, I guess, where you were, say, a decade before to where you are now? What was there a catalyst, something that kind of led you in that direction, or was it just
it was a promotion and they paid me for it, right?
okay?
That's a progression. I mean, it was just a very simple move across that, and someone had to do it, and someone had to stitch these risks together.
Mm-hmm.
So the correlation risks across the matrix of the different pillars, and also the ability. At the time, financial risk was the problematic one. It was an operational risk. Today, it's probably more operational risk, but at the time, financial risk it's horrible. Interest rates were near zero, especially outside of the US. What do? You price at 3%, 5%, you've got guarantees. So they needed an actuary who had the financial risk management core skills to manage those books and report those books, measure those books with a team, and knowing how that works, the interest rates, the currency risk. Oh my God, all these were breaking up. Now it's so much better because we're so much more trained. We have the asset side of the kind of like vehicles and products to actually hedge this. But at the time, it was almost like we were just fixed interest and all hell broke loose. Do you know what happened to the currency risk? Never heard of currency swap. I had to go back to school in 2010 to understand how swap book management works, right? The detail of that. So it's ever learning. It's market moves, and now it's on operational risk. How do you quantify cyber risk? How do you quantify third-party risk and supply chain risk? That's our core skills. We have to break it down.
Interesting. So going back to the digital transformation, the topic of digital transformation.
Yeah.
If we were to start with just fundamentally, what does digital transformation mean to you?
Digital transformation is a very cliche word, I think. I'm actually going on to a digital transformation insurance conference where I'm a keynote speaker in Hong Kong next week. And I bet you most people have a different view as to what transformation means. So what I'm going to use is actually a framework that I've got from a management consultant for Salesforce. I guess you know who Salesforce is. A gentleman called Geoffrey Moore, and his book on understanding the zone to win. He kind of brings this type of evolution of companies into four zones. performance zone, number one, productivity zone, the transformation zone, and the incubation zone. And there is actually a phase of evolution there. Performance is your traditional MetLife, Lincoln and all this, where you just quarter to quarter targets, status quo, no change. So that's not transformation, that's just churning the machine. The productivity zone is when you actually have to cut costs, streamline, automate, push the barrier a little bit and enhance. Again, that's not transformation, that's just automation. That's not changing anything but to speed things up and get rid of redundancies. And then I'm not going to go to transformation. I'm going to explain what incubation means or innovation. Innovation is nascent. It's very startup. It's this idea stage of, it's not really real yet. It's still a proof of concept. But transformation is where it's really going to pivot the change of the company. It's the 10% of the revenue that's going to be 100%. Is going into a different space and dominate this as the new kind of like company. And meanwhile, is a great example. It goes from a proof of concept innovation towards a whole digital economy in the ecosystem of life insurance, and no one has been there. So it's literally a true transformation for insurance business from the conventional space straight into digital space. And the digital economy, do you still use cash? I don't. I use credit cards.
Yeah. Well,
online transactions.
I only use it when I have to.
Oh, all right. Maybe in my side, I don't even need to have cash. Everything is transaction online. Everything is on your app. So that's the digital side of transformation. But transformation is literally a pivoting from the old to a completely new, and not just simply automating a process. That's transformation for me. And I think that's how I would interpret Jeffrey Moore's framework as well on transformation.
Yeah. So you mentioned, I think you partially answered this. You talked a little bit about life insurance, but just take this again. Fairly broad question is like, why is digital transformation relevant for actuaries specifically?
It creates a new space of work for us. If everyone is also crowded in valuing, whole of life policies or loss ratio, loss reserving for auto insurance, you're going to be too crowded. What is going on with transformation is amazing opportunity for us as actuaries as a profession. We have the skill set. We just have to apply them in a different protocol and different environment.
Yeah, that I couldn't agree more. And I know we're going to talk about that a little bit further on about some of those opportunities. But now, since you transition into quantitative risk management, you spend time in a couple of fairly more modern environments in insurtech and fintech. So what based on your experience in those spaces, what are the most significant developments in digital transformation playing out in those that you've seen play out in those spaces today?
Yeah, as I explained, innovation is about testing out things, isn't it? It's and what I'm seeing quite a lot on is the on-chain and Web3 world. A world where it's completely on-chain, whereas we're still, many of the insurance companies, almost all of them are still off-chain, except the likes of Meanwhile and one or two. So that's really big right now. How do you create a payment system on chain? How do you use the blockchain technology as a protocol for smart contracts? We see a lot of actuaries, especially coming out from Canada, looking at smart contracts of insurance kind of contracts or credit lending contracts, financing contracts, and bring it into a smart contract where it's so automated. You just don't have an administrator trying to figure out and remember what the covenants are or what the clauses are. I see a lot in ESG, a lot of those climate change studies, liability stress testing and all this. I also see, maybe because of just the way I tend to want to look at things, I see a lot of actuaries also involved in financial inclusion, accessibility of, because we're now having the technology to make it cheap, fast, quick, efficient on a per unit, you can start applying this into the mass without the cost of having an advisor going in or an agent, meeting you and having 2 hours of their time doing it and high commission. These are all technology where as long as you've got a wallet or or online account, things are possible as long as there's internet as well. So there's a lot of financial inclusion happening as well, and a lot of very good work by the pioneers, the actuaries who are pioneering all this. I'm very proud of it. I'm very proud of the profession.
Great.
We may be mavericks, but we're doing things differently.
Yeah. I'll mention, because you talked a bit about the blockchain. You're using the term off-chain, and there's an episode we did, just to mention to everyone, anyone who wants to get some more details on that, episode 44, is entitled Web3, Blockchain and NFTs. And the guest there, he talked about distributed ledger technology, and he got into the details of that. So if you want more details, that's a great resource to look at. One follow-up I have is, specifically, we talked a bit about insurtech. We kind of lump them together, insurtech, fintech. But
yeah.
I know a lot of actuaries working in insurtech, but I don't know as many. Well, me personally, not to say that they're not working in fintech. Anything unique about fintech that you're seeing now? I'm just curious, because like that's a space I'm not really familiar with.
Yeah, so insurtech is a subset of fintech in my mind, and anything to do with payments, anything to do with distribution channels, and all this that may not necessarily be insurance. Like I've got an actuary right now who's doing stablecoins and fintech on a payment system on chain, just purely with tokenization to make it happen really quickly and cheaper than going through hundreds of middle person between your MasterCard to the merchants. This is fintech. It may not necessarily have an insurance element to it, but it's in the financial system. It's a financial protocol. Quite a lot of things happening there, especially in the payment side, custodian side, tokenization side, ESG on finance transactions, carbon pricing, all on tech.
This actually just came to me, and I hope I'm not going too far off script here, is when we think of payments, one of the things that frustrates me, and I'm hoping that somebody is solving this problem, is, when you reverse transactions and it takes like 7 to 10 business days, I always wondered why. I mean, I would hope that someone is working on that problem, but it's just so frustrating with some of the bigger institutions, the more kind of traditional institutions. You make a transaction and you reverse it, and it takes not always. Sometimes it's 48 hours, 24, but sometimes it's 7 to 10. And I just can never understand why it takes that long. It's just ridiculous to me.
And it also costs a lot, right? Whereas with the on-chain, if it's done, I mean, it's just one point to another point. There's no middle person involved. That's the scary bit. You're gonna have a lot of disruption going on, because what happens to all these middle guys when the payments becomes on chain? That's the resistance.
Yeah. So yeah, you just answer the question, just because people they're historically have been there, and I guess
it's my livelihood you're gonna challenge.
Yeah,
if you're in one of those ones. So trying to break that kind of like infrastructure, unless you start from scratch, is you've got a lot of resistance.
Yeah, that's very helpful. But it's good to know that at least to some degree that there's going to be alternatives. No.
Yes.
So I mentioned that you're now the senior advisor at Meanwhile. I know you've had other roles there, and that's the first and only insurance company denominated in Bitcoin. So the natural question I have is, why? Like, something must have inspired you, I would imagine, to start or co-found, I guess, this company. So
I didn't co-found the company. I'm the chief risk officer that was brought in because they needed a what they call a GOAT,
right.
old person or a veteran to go in. The two co-founders are tech brothers from the Silicon Valley, and they didn't have much of a life insurance kind of like background. They were technologist entrepreneur, and they wanted to find out how to. It's opportunistic, perhaps, to find where things needs rebuild. And insurance has always had this reputation of being laggards, slow, not moving, inefficient, blah, blah, blah. And they chose this space in particular because it hasn't been done. A lot of the property and casualty side, the wallets, the cyber risk, and all this, lots of people in that space. But no one has done the long life insurance space. And I think naivety to some extent gives the guts to do it. And I wish I thought about it. I really did. And also another thing is it's backed by Sam Altman and Google Ventures.
Yeah.
Now you wonder why on earth would these two parties or actors come and get involved in insurance? I mean, insurance are traditionally, your Mass Mutual, your MetLife, your really old school guys doing it. And why are these two parties coming in? It's fascinating. I mean, these are people who wants to change kind of like the way things are done traditionally, that they know the infrastructure that's available, the technology that could be done, but the pathways and the complexities of it, I think experience cannot replace. It is indeed a complex business. Actuaries have a lot of roles to play in this type of thing because we need to navigate, but we also need to understand the fundamentals of how these things work before these tech guys could actually code it, because they wouldn't know. And that's important.
Yeah. So when I described the company, I gave a very simple description. It's life insurance denominated in Bitcoin. But how would you describe the company? Is there more to it than that in terms of, the products, or is it just fundamentally just kind of traditional, same products, but just different,
Absolutely.
channel,
Same products, different protocol.
different
So,
protocol?
you want to exchange money, it's the same thing. I want to exchange from USD to, say, GBP, the pound. That's the outcome I want. But I don't want to go through 8 days of being passed around. How do you move that from point A to point B? It's the point A, point B is the same. It's just the protocol inside. You're upgrading to a new technology, a new platform, a new way of doing things.
Okay. So all the actuarial work is essentially kind of same principles, fundamentals, more or less. Nothing like that part is not, but fundamentally at least, or systemically.
Yeah. The formulas and methodologies unchanged, but the problem is with Bitcoin, as you know, there's no long-term curve. So how do you do a valuation without a valuation interest rate term structure? There's a lot of things missing. Is this a currency? Is this an asset? Where do you find the assets to back this thing? Where do you find their liabilities? And the amazing thing is, because this ecosystem is so new in the digital economy, there's just so much opportunity for not just actuaries, but anyone really, to actually go in and say, let's create the long-term assets. Let's do an ETF. Let's do a fixed interest. It's like going back to, old age of creating this stuff, but in a different platform with a different type of, instead of paper currency, you go with a digital encryption.
Mm-hmm. So we talked about, I guess fundamentally, like you said, the main thing is how you get from point A to B. It's on chain versus off chain. So that makes a lot of sense to me in terms of, I would imagine, or how I would think of it is terms of from like an efficiency perspective, from a digital transformation perspective. That seems to be the core challenge that you're seeking to solve with this venture. But are there any other specific challenges that you've seen in the market, or the founders, whoever in the company, have seen unaddressed in the market that the company is specifically seeking to address? Or would you say it's mainly just that, being on chain versus off chain?
No, there's a lot of things. You've got the assets that are missing because insurance is a liability-driven business. We don't have the asset ecosystem, the capital markets. So when the ETFs came out from BlackRock, it was like whoopee, one little step for mankind. So it's, yeah. I mean, there's still so much to do, so much. I mean, just the fact that how do you pay tax on this? Do you pay? How do you bring it into an estate? How do you incorporate this into a will? Is this a legitimate insurance contract? There's just so much to still trying to piece together. So yeah, I think it's a place like where you've got a new territory and you have to go in and build a house and build a cinema and build a supermarket. It's just so much to do there. And it's excellent for the generations that are coming, or even now, to actually explore, because it's not just about calculating liabilities.
Yeah. So that's okay. That's very helpful. One thing I want to follow up on with that is, like, when I think of like some of the insurtechs, some of the problems that they're trying to solve is just insurance is too, for instance, is too cumbersome. Like even something as simple as a policy application. When I think of doing a policy application with one of the larger legacy companies versus, you have to go on the phone, do all these things. Whereas with some of the insurtechs, I think you can just do it fairly quickly on your phone. Like when when I guess you could say, where the founders were thinking of this company, other than just the on-chain, off-chain, like just thinking of the fundamental drivers for actually even saying we should start this company, other than just wanting to, put things on chain and think of the efficiencies there. Were there any other drivers for in other words, incentives to start the
Of
actual
course,
company? Yeah.
I mean, you're in that generation where you wanted the language to be simple, right? You want the language to speak your language. I mean, the language itself, if you look at the meanwhile application, the language itself is not your legalese. You don't, it's not a lawyer trying to put in if there, therefore, herewith, blah, blah, blah.
Mhm.
You don't get that. It is very straightforward, very clear. If it's not clear, you get complaints. It's meant to be understandable for those clientele. And make it customer experience is number one. And we all know that. And the reason why Apple is such in great demand is because the design is fantastic, the product is great. But you don't see a lot of those cumbersome ones come out because no one wants to use it, no matter how cheap they are.
Mhm.
So absolutely, I mean, the clean slate helped because the company was a clean slate. What a lot of conventional companies could not do was actually change the process because no one dares to break it. If you break it, you're dealing with a sacred cow. So that kind of like zone is not conducive to transforming into a zone that is truly transformative because no one dares to change that. But the problem with that is it's going to be a Kodak moment when if someone actually does that and drives all the new generation of customers out there to this type of way, those that did not change or could not evolve, they're just going to die down.
Mhm.
There's just what we call runoff.
Yeah. No, customer experience is critical for sure.
Absolutely.
Yeah. Now, earlier we talked a bit about the opportunities when we talked about digital transformation and why it's relevant for actuaries. One of the things you mentioned is kind of expanding. You never use this term, but I'm just going to use like growing the pie, I guess, in terms of where we can play and where we can add
Oh yeah.
value. So what are some examples of areas where digital transformation has opened doors for actuaries, specifically beyond insurance?
Well, I've mentioned about the Web3 environment, the digital environment, beyond insurance. You know, I'm going to be a bit controversial here. A lot of 30 years ago, it was my generation to go to banking, I think, or even investments. Now it's becoming quite common, at least where I come from, in outside of the US. Actually, so a lot of them are here. Some of them are actually on, you know, space leasing, satellite leasing and all this.
Mm.
There's infrastructure building, project finances and all this. This has been there, it's no longer that novel. And the thing is, we really have to look at where we can add value and where we will feel challenged, and we will apply our skill set in a way that is going to last for another 20, 30, 40 years. I think I would encourage, people to actually look beyond that. I mean, I'm in my 50s, so I'm okay. I can retire and I can still hang on to this conventional world. It's still going to be there for the next 10, 15 years. But for those that were looking at, the trajectory of the long run, try and look beyond the conventional, I would say. Look beyond that. There's so much to do. I mean, one of the fascinating things, a colleague of mine, his son is also an actuary, is doing computer games and gaming, and that's 10 years ago. Gaming because of scenario testing, all the kind of
Yeah.
simulation and all this. How 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 amazing is that? He enjoys gaming. He enjoys game those games, and he's in a job that uses his mathematical skills to do that. So I think we just have to look beyond this. And I cannot predict. I mean, AI is now past. Those who are in AI should have something by now. Generally, it's just no longer that new. So where do you go? Cognitive, biometrics, genetics. Don't know.
Yeah, interestingly enough, I did actually have an episode on esports about maybe a month or two ago. So
Absolutely, absolutely. I mean, if you love to play games, how amazing is it to work in that environment day in and day out without your parents shouting and screaming and to get a day job?
yeah.
He's being paid a lot more than many actuaries I know for sure.
For sure, for sure. Yeah. And yeah, so yeah, I think we're 100% aligned on that. And that's one of the reasons want to have you on is just love to talk to actuaries who are, championing that message of exploring wider spaces. And, this has just been really good conversation. And just again want to thank you, Annie. I've learned a lot and I'm looking forward to sharing it with the community. I know everyone else will learn as well. And now you're officially a member. You're live with the Maverick alumni.
Woohoo! I'm very proud to be one of you guys now. Thank you very much, and thank you, Dominic, for all the work you're doing, bringing awareness to the profession and having that curveball thinking and kind of like outside of the box thinking. That's invaluable. If everyone's doing the same thing, it'll be very sad.
Yeah, fully agree. Well, have a wonderful rest of your evening, Annie.
Thank you, and you too. Have a great day.
Take care. Bye bye.